Congratulations, you found your dream home. But you cannot take the loan required to buy your dream home.
Try pledging a show cash.
Stay tuned.
Stay tuned.
Welcome back, guys. As promised, we're going to share with you how to take a bigger loan in order to buy your dream home. But before we do so, we have to talk about what is TDSR.
Total Debt Servicing Ratio. It was introduced in 2013 to prevent overborrowing. And this TDSR, in short, it limits your monthly debt repayments to 60% of your gross income. If you were to earn $1,000 per month, the max amount that you should use to service your loan is up to $600.
Yes, and unlike the cooling measures, TDSR will be a permanent reform. So let's touch onto the TDSR. As you can see from the top over there, that's the formula to calculate TDSR, not more than 60% of your income. And when we talk about the debt, we're talking about all forms of debt.
That's right.
Housing debt, credit card loans, personal loans.
TDSR, where it was introduced, is a big impact on the variable income earners. For a fixed income earner, the TDSR will be based on 60%. But for those variable income earners like hawkers, like property agents like ourselves, and taxi drivers, they will even need to go through a haircut. That means lesser amount.
It becomes more restrictive for these variable income earners actually, because it's only recognized up to 70% of our income.
After TDSR was introduced, there's a very interesting phenomenon. We realize that more Singaporeans are more willing to report a higher tax amount in order to take a higher loan itself. Maybe let's use an example to describe how does this 3.5% impact on the market.
Both scenarios are based on the income of 5K.
And this is based on this Carl's Mortgage Calculator. It's a free app.
On the left is where the TDSR is applied of the 3.5%. If you work it backwards, the property they can buy is 890K. On the right is based on the average market rate of 1.5%. So as you can see, the loan and the property value has increased by quite a bit actually.
For easy reference, both income are fixed. Loan tenure are fixed at 30 years. So the only difference between these two is the 3.5% interest versus the 1.5%. In fact, the market interest rate is below 1.5%, but we're just using 1.5% as a reference.
That was the calculation for a fixed income, but what about the variable income? So for the variable income or the self-employed, as you can see over here, if the income is based on 9K and you have your car loan, your credit card and your home loan, right?
If you look at the base of this TDSR, the 9,000 income has to take a 30% haircut. So all in all, when this individual fills the TDSR, in this case 71.5%, he will not be allowed to take a loan that he needs.
Now, the bank tells me my income is not enough to take the loan I need. What can I do? Now,
this is a very common question.
We're going to share with you the secret sauce. One of the ways to increase your loan would be to do pledging.
There are many terms to this pledging and show cash. So maybe I just do an introduction. In the market, pledging is also known as asset-based lending.
Yes.
Unpledging is also known as show cash or show fund. Yeah, it's all the same thing.
Yes, as you can see from the graph over here, basically pledging really means you pledge with the bank for a certain amount of years, for example, 4 years, and the bank will then in return give you a higher loan based on the assets that you have pledged with them.
That means you show them that you got this amount, pledge with them in the forms of deposit, then they lend you more money.
Whereas show cash or show fund is different in the sense that you just need to show the bank normally 2 times. One during the loan application, you have to show it for about 7 days. Then the other one is just before the loan is dispersed. Okay.
For this show cash, it's more flexible. You do not need to lock down your funds, and it's going to show to the bank for a short period of time. So it's more flexible.
Yes.
But because it's flexible, this amount will be larger than the pledging amount needed. We'll explain to you in the next slide. So before we go into details, right, what are the acceptable assets for pledging?
All kinds, all the way from deposits in Singapore, all the way to the bottom, gold.
We have gold, we have bonds, we have stocks. Okay, different banks will have different SOP. For the details, you could refer to a bank or call us.
We will be more than happy to help. This table over here actually shows what is the loan shop for.
It might sound a bit intimidating for first-timer who see this table.
Yes.
But if you're confused, just feel free to give us a call. We will do this breakdown for you. But let's try our best to explain this in very simple layman terms for you. Assuming a 30 years loan tenure, and you need an additional 100,000 loan itself.
So for the pledging portion, you actually need to put with the bank 35K for 4 years if your loan shortfall is 100K. But if you plan to show cash instead, the amount will naturally be higher at 119K.
Maybe let's use a scenario. So for this couple A, they want to buy this property which is worth 1.1 million. But both their combined income only allows them to take up to the maximum for 1 million property. So what can they do? They have a shortfall of 100,000. So what this couple A can do is to pledge for 4 years, 35,923 to the bank for 4 years. then the bank will lend them additional $100,000. Okay, bear in mind that all these numbers might differ a bit because of the calculation. So give us a call to give you the exact number itself. But for this pledge for 4 years, it's usually not commonly used because most of our clients or buyers will prefer the show cash method, which is more flexible.
Because you don't actually need to keep with the bank any assets for the next 4 years, and you only need to show cash 2 times.
But it will be a bigger sum. I'd rather go and borrow money from my parents, in-laws, or whoever for short 7 days for 2 times. So this show cash is more popular. This table might sound a bit complicated. If you want to know more, just give us a call.
Yes, I will be more than happy to help. So in summary, not only pledging or unpledging, there are other ways to improve the TDSR. For example, if you have an unused credit card, please cancel it. It actually adds up.
If you want to take a bigger loan, you either increase your fixed or variable income or reduce your liability. Most buyers might not be aware that for every unused credit card, right, even you don't owe any money, there will be a certain sum that will be deducted. This will reduce your eventual loan amount.
If possible and feasible, pay off your car loans. It will really help with improving your TDSR.
A lot of people also are not aware that those interest-free installment purchases, like your cots, furniture, appliances, all this will be factored into your TDSR. So be careful of this. Interest-free installment purchases.
Yes.
It sounds good, but it will affect your loan amount when buying property.
Yes. And a little known fact, avoid being a guarantor for other people because believe it or not, it actually affects your TDSR as well.
To be more exact, if you are a guarantor for a certain sum, 20% of this money installment for this guaranteed loan will be factored in your TDSR, which means you can only take a lesser loan because of this guarantor role.
So with that in mind, these are all the ways you can improve your TDSR. But as always, if you're unsure of anything and if you feel like you need further assistance, feel free to give myself or Dennis a call. I'll be more than happy to help you guys.
That's right.
And we look forward to seeing you in the next video. Thanks for watching.
See you next video.
See you. Bye-bye.
Bye-bye.